not to gauge the mood of the market. It's purely for Christmas cheer. So I hope our viewers got that. Thanks, Puneeta. Always a pleasure speaking to you, and have a great year ahead.
Thank you. Thank you.
Okay, well, let's move on from the markets and talk to some corporates now. Bata is one stock in focus. The stock is down 11% this year. Higher raw material costs, weaker demand has hit the earnings performance. To discuss where Bata stands now and how the second half of FY23 is shaping up, Gunjan Shah, the Managing Director and Chief Executive Officer at Bata India, is joining us on the show. Mr. Shah, good morning and thanks a lot for joining in. I wanted to start by asking you about demand, because there are some trends which indicate that demand is slightly on the weaker side. The rural side of the economy, tier 2, tier 3 cities have not recovered as well as one would have expected. Are you seeing that sluggishness as well? And what is the outlook for the second half of the year?
No, see, there are two parts to the demand the way we see it. But before that, good morning to everyone, to you, Sonia, as well as to the viewers. So there are two parts to the demand the way we see it, right? And there has been, obviously this year, while overall demand has recovered significantly versus pre-COVID, etc., I think the key piece that is the watch out is basically the impact of inflation. We have seen in our category and overall a very high level of inflation, and that does have an impact, especially at the mass end of the categories. And that is something that's a watch out. But the rest of the categories, as far as premium goes, sneakers, casual footwear goes, I think we've been doing and seeing good demand on it.
Gunjan, hi, good morning. Good to have you with us here. Thanks very much. Prashant this side. Could you tell us what percentage of your portfolio is mass? Because you're also, and what percentage is what you describe as premium sneakers, etc.
Right.
And second, on a year-to-date basis, volumes for Bata are, at what level of pre-COVID levels, if you can give us a sense?
Yeah. So mass category, the way I would say it is, pricing below 1,000 would be in the range of about 40%, right? That category has also seen impact during this year for GST, and therefore that has also created some kind of an impact. I'm sure it's going to wane off over a period of time, but that's the situation right now with inflation as well as the taxation change. The rest, premium would be the rest. Out of that, sneakers would be about 20%. So that's how the split of the portfolio would be.
Gunjan, morning. Could you give us an indication of what the volumes are for the mass category?
Okay. Yeah. Right. So we saw some volume, sluggishness in the first half of this year when we, bore the maximum brunt of the inflation as well as the price increase that we had to take. But post that, we have seen positive recovery ahead of pre-COVID levels in volumes broadly.
Some more numbers, some more nuance. So say in the month of October, November and half of December, what are the volumes in the mass category and how would it compare with pre-COVID and last year? And if you could give the same for even the premium.
Yeah, so I'll not be able to give you commentary on the recent quarter, etc. But broadly, the commentary is that we are seeing volume-based growth, at least in the quarter that was till September.
Okay, volume-based growth till September. Well, that's not helping. We're not getting any numbers from you. But let me, shift focus to the operational performance, because margins have been under pressure. At one point in time, way back, I guess, used to sit on even 30% margins, which was your peak. And now it's come down to less than 20%. As the raw material costs sort of normalize, what can the average margins be in FY24?
Actually, if you look at it, Sonia, our margin profile has been improving every quarter. Yes, there has been an impact on inflation for the last year, as I mentioned earlier, and especially clubbed along with the taxation change that happened in GST for pricing below 1,000 rupees. So that club has had a disproportionate impact. But as I said, we are more than hopeful that this should wane off as time goes by. And that should therefore then basically reflect in the margin recovery continuing going ahead.
Sure. So do you think that you could get back to that sort of 23-25% range? Could it be better than that? What can we hope for? What can your investors hope for?
Our endeavor is towards basically making sure that we get sustainable and profitable growth. And I don't see a reason why in the medium term we should not be making sure that we live up to that.
Gunjan, just a point on sneakers, right? Sneakers are all the rage. I mean, we hear it from other companies we speak with as well. It's for you. It is now. You said 60% is premium and 20% of that is sneakers. So 12% of your total sales is sneakers.
No, 20%. So 20, 40.
Oh, okay. 20% is sneakers. Got that.
Yeah.
And these are in all brands. I mean, you've Power, Hush Puppies.
Primarily, they are Power and North Star.
Okay.
Right? That is what drives the sneakers. But we do have basically sneaker offerings across other brands also.
Okay.
Which is different usage locations. That club is about 20%.
Okay. And what is where is this price range start for you? What is it growing at? I believe this is the fastest growing segment, not just for you, but in the industry. So what are your plans here?
So there has been a lot of progress. We have also invested a lot behind this category. The price range, Prashant, ranges from around 1,000 rupees to almost 5,000 plus, right? So that's a pretty wide band. We can afford to do that because we've got multiple brands that straddle various price points and usage occasions, right? The other thing that we have done significantly is one is expand the range of offering to consumers. We have also opened almost in the last 18 months, almost 250 sneaker studio walls across all stores of ours. So, and that's expanding at a very fast clip every quarter. And we expect that to continue driving. Sneakers has been driving our overall growth recovery. So it's been significantly ahead. While the overall growths are ahead of pre-COVID levels, we see sneakers even further ahead and therefore driving growths within that.
What is the rest of the portfolio growing? What do you see the rest of the portfolio growing at, and what do you say? Where do you see sneaker growth?
So for the quarter 3, that was September, we saw basically overall growths around 15%. Sneakers was around 25%. So it was significantly ahead, driving the overall growths.
You had plans.
Prashant is asking all these questions, from a personal standpoint. having 2 kids, I'm sure he's.
I have a very basic question. How do you define a sneaker? What is a sneaker?
The sneaker studio concept.
I think we should ask
this
that.
sneaker studio concept is really interesting. There are 900 different styles. And 9 brands, and there's this huge wall. I'm sure you've seen it. Many people are doing it these days.
Yeah.
It's confusing, to say the
We
least.
should get our shoe expert, Mangalam, in there.
And probably, so Mr. Shah, I just wanted to understand, you had plans to add 500 new stores in the next 3 years. How many this year, how many in FY24, and how many in FY25? And
So we are well on track for that plan, and you can calculate for yourself, but we are well on track, and most probably we should be ahead of plan on that front. What I had also mentioned is that we want to make sure that it is a prudent ratio between the franchise model and the company-owned model. So we will have broadly about 80% of net new store openings coming from the franchise model. So that plan remains on track.
Do you think you will have to perhaps spend more on advertising, considering there's so much competition these days? And advertising as a percentage of sales, how much would that go up by in FY24?
So, Sonia, this year, 22, my best estimate would be that we would cross peak levels of advertising that we have done in the past, which itself was a significant ramp up over last almost 5-6 years. We believe that advertising and brand investment works in our favor, so we will continue that. While quarter on quarter, there might be some lumpiness, but broadly over medium term, we will continue inching that forward. We are currently at about 3% of sales.
So how is the market share shifting and trending in the mass market? Because many of your competitors as well have seen weakness in the quarter gone by. Could you give us an indication of the market share shifts? And is Bata gaining, losing? If yes, to whom?
Yeah. So I think overall, I would comment on it, right? Overall, from whatever we get to hear from Euromonitor and other sources, is that COVID, we did see there was a significant impact that we saw in terms of shares. But the way we are seeing this year going, we are more than confident that all of that is coming back now, the way the first 3 quarters have gone.
So you will recoup the market share loss that you had during COVID?
Yeah, absolutely.
So your market share
was a disproportionate impact that came on to retailers and especially organized retailers like us, etc.
Okay. I guess, this also assumes importance because of the kind of hectic competition we're seeing, right? Whether it's from some of your peers like Campus, the new collection, it just begs asking whether you could see perhaps more operational pressure and you may have to sort of come out with cheaper price points just to deal with this kind of competition?
No, see, Sonia, the market in India has been intensely competitive for decades, right? It is just that a few players have got listed, but it is the largest player, which is us, is less than 5% of the market. So it is a significantly fragmented market with an intense competition. And competition is always good. Consumer benefits and keeps companies like us agile, right? And therefore making sure that we are in trend with what the consumer is wanting, and therefore the consumer gets the best value for proposition.
All right.
So I don't see that as a threat. In fact, I think that's something that makes sure that we are all moving with the times and therefore offering the best value to consumers.
Okay, got that. It's a pleasure. Thank you very much for that chat, for that conversation. Really appreciate it. Bata,
Thank you,
the most trustworthy, oldest, well-known footwear brand in the country by far, and of course the largest as well. 1625 on Bata. The stock's down about 1/3%. Premiumization is the name of the game, or should I call it sneakerization, which I think is what the management alluded to as well.
Sneakerheads, right? That's what they call themselves.
It's a culture thing, right?
Yeah.
Sneakers. I mean, this trend for dirty sneakers, right? I don't know. I mean, I'm learning new things with.
You should know. You have children of that age.
I do, but
He can't keep up.
begging you to buy Air Jordans and whatnot. I mean,
there's a culture gap, you try and bridge that every day. But 100 points lower on the Nifty, 18,022 is what we have, which means that the market has actually bounced a little bit from the lows. The low today is 17,965. And we're about 50-60 points off the low point of the day. So this is, a decent bounce already, which is starting to come through. Nifty futures premium has expanded a bit, 74 point premium on the futures at 18,099. We'll take a quick break here. We have the management of Narayana, the hospital chain, join us next. Stay tuned for that conversation coming up.